Good evening, everyone, and welcome to tonight's live weekly trade plan. My name is Tim, and I'm more than happy to take you through tonight's webinar. So this is effectively a 1 hour live webinar, and it's really all about multi-time frame analysis. The markets are obviously closed, so it does represent a good time for us to take stock of what's happening in the markets and look to really focus in on price action across multi-time frames, which can enable us to effectively plan for the week ahead. So we will be taking a technical look at weekly and monthly time frames and identifying important highs and lows or genuine levels of support resistance that we think we can use for the trading week. So as always, we'll be observing our main 15 liquid global markets, plus any other markets you indeed would like us to have a look at for you. Certainly if we've got time towards the end of this webinar. So without further ado then, I hope everyone's keeping well. It's great to have you back, guys. So this is effectively the second one of the year, actually. So we were, I think we missed the first proper Sunday, but now we are back to full strength every single week. Okay, hopefully you can take a quick moment to make sure that you're aware of the risks that are involved in trading the financial markets. Right, so what is, is there an importance to multi-time frame analysis? In our opinion, yes, there is. Firstly, you can see more clearly what's happening and who is genuinely in control of each market, which you don't often get from daily time frames or for that matter, much smaller time frames where you get really choppy price action. It's nice, it's really sort of good, even from your own sort of development as a trader, to just step back and just try and gauge and assess what's happening on a bigger time frame. And it often it can provide you with a little bit of clarity. The next reason is the larger the time frame, the more important the genuine level of support and resistance becomes. So that's important to take into account. And finally, it shows you the important levels where a market is likely to move towards as well. So sometimes we identify a major level of support and resistance on a weekly or monthly basis, and it provides us with significant resistance at that level if price is moving towards it. So there are levels that can really assist us with taking profits as well if we're in those trades. Okay, so let's get straight into the charts, and I'll just bring them up ever so briefly. Okay, so let's start with the dollar index. So the dollar index is the dollar itself is an interesting animal at the moment. You can see the bearish nature of it. So without a shadow of a doubt, there's bearish tendencies. Just recently, over the last week, we've had a potential opportunity to go short below 90.50. That was the weekly level from last week. And although that existed, you can see what happened to the price action over the course of that week. We did get the confirmed break beneath the low, but since then, price has effectively just moved sideways. So that's what we take away from this price action. So we were very interested to see how it would behave around these lows. And as you can see, there was a significant bit of buying pressure coming in. And again on Friday, actually, believe it or not, despite the US shutdown, which according to Trump, the Democrats have played right into his hands. So all that will unwind over the course of the following week. So expect a little bit of turbulence regarding the dollar. We obviously have a bearish connotation now with the US dollar, as you can see. So looking for opportunities to sell it unless something significant changes. And that could be price action in itself. That could be a real rejection of the lows, for example. So moving along then to the euro dollar. So what I will do for the purpose of consistency, sorry, if I just go back to the dollar index, there's a little bit of a weekly rejection. And then if we look at it on the monthly, it's still looking pretty strong to the downside on the monthly candlestick. So what I'm going to do is, for the purpose of consistency, I'm going to take today's low, last week's low, and work with that as a level of support. So the 89.93 level. So 89.930 level. So that identifies the low. And actually, I'm going to work with the high as well. The reason why, when we look at all these dollar-related pairs, if we start getting reversals and breaks across the board, it actually gives us the heads up that there's actually some significant strength coming into this market, if that's the case, maybe from a technical perspective. So I'm going to look at the highs. So we're looking at the 90.740 level. So I'm just going to move the weekly level here. So 90.740. No, I got that 740. Excuse me. So let me change that again. 740. Right. Okay. So these are the weekly levels of support resistance. Like I said, on a monthly chart, it's still looking quite bearish. So this is only a little pullback, and we do have another 10 days in this month. So plenty of scope for this market to move lower, unless price action tells us otherwise. Now, this is just the same picture as the dollar index. So that is effectively, it makes up the majority of the dollar index in itself. So that's why this is an inverted view of that. So you're going to get the same kind of rejection to the upside. So we're getting very, very strong bullish market continuation, which is what we were expecting above the 2017 last week, and a little bit of a pullback to that level. So that is quite important. So what I'm going to do for, again, consistency purposes is to work with the highs at 23.22. So we'll change this 23.22 to the upside, and to the downside, we're actually going to work with this low. So the low is 21.64. $21.64. So that is effectively the levels. And as you can see, we're getting a bit of a pullback of these highs, but you would expect continuation for the time being in the euro dollar. So we'll keep an eye on those levels throughout the week and see what happens. So we've had a bit of a bullish pound over the last week. You can see we were looking for opportunities to buy it above 37.43. We effectively decided against it, just because what was going on across the board, and knowing that it didn't really represent the correct kind of risk reward. So we just monitored the price action, and we're coming into a little bit of resistance at these highs, about the 39.50 level approximately. And on a Friday, we touched that level and then bounced off it. So taking that over to a weekly time frame, if you can. So we're obviously in a particularly strong upward trend over the last 4 weeks. I'm going to zoom in a little bit more for you so you can see this in a bit more detail. So there's the 4-week kind of nice bullish run to the upside. We have run into the 38.73, which may be responsible for this particular pullback. So what we're going to do is we're going to identify the highs and the lows of this week's candlestick to show you on a monthly time frame. Very, very bullish, would expect continuation. But again, there's that 38.73, might provide a little bit of resistance, preventing prices from moving higher. So we'll take that information and we'll work with the highs and the lows. So the 39.44, so 39.44 level to the upside, and sort of a potential level of support on a weekly time frame. We'll look at the lows, which is 37.28. So we're just doing this to be consistent. 37.28. So we're going to keep an eye on these levels during the week with the pound dollar. The yen has been quite an interesting market to kind of follow. So we had the confirmed break during the Christmas period, which we were saying quite many times. There's a downward pressure, so you're looking for the break. When the break actually arrived, didn't really give us the opportunity to get into it to the downside, so we stood back, and we've had some continuation because we were running into these levels in here. So last week we were identifying the 110.83, and we've had a bit of a break, but a little bit of a sort of bounce off that lows, certainly at these lows down here. So it looks like we're going to get a little bit of continuation. However, the close of Friday and Thursday's candlestick we're not overly comfortable with. So so it's probably fair to say we're looking for opportunities to sell the dollar yen. We're just not overly comfortable with kind of this particular price action at this level. And you can see the close on Friday is again. That's why we like working with these levels of support resistance on multiple time frames, because you can see how price wants to interact and engage with those levels once more. Okay, so for consistency purposes, let's work with the weekly highs and the weekly lows. Again, looking at this chart, you would imagine and appreciate that there is potential for this price to squeeze lower. So what we'll do is we'll work with the weekly levels to the upside, which is 111.47, 111.447. So 111.47 to the upside, and to the downside, we will work with 110.18. 110.18. So it's important to mention that these are levels of support and resistance, and these are not sort of entry prices, to the downside or to the upside. We want to see how price behaves around these levels, and we also want to see how these levels interact with other significant levels of support and resistance. So occasionally there's a bit of overlapping, and the high would sort of coincide with our 111.74 as well. So all we're talking about is just guiding us and building a case for taking a trade and deciding whether a trade exists or not. So that's why we'd just like to add these levels of support and resistance to the conversation. Okay, so the dollar CAD. So as you can see with this particular market now, we're getting the flush down, but what we're getting now is a double bounce. So we're going to be watching last week's high very, very closely, because it could constitute a structural failure, and it could give us with an opportunity to actually take this market higher. So let's look at this on a weekly time frame, and it will hopefully look a little bit cleaner. So what we have had in this market is a market which has bottomed out. We're getting this little move and a bit of consolidation, and now we're finding potentially a little bit of support at this level. So working with the weekly high in this situation might just constitute a little leg higher, especially if some strength starts coming into the dollar. So we'll keep an eye on the dollar CAD very closely and just see how this market stacks up. And going back to the daily time frame, we can see that we've been in this sideways moving market now since the end of December. So it's flushed lower, it's bounced back, it's attacked the lows again. It's failing to break those new lows, so that's quite important. And we're getting a bit of buying pressure coming in. So whichever way this market wants to move. So for example, if we get a break above 25.89, this would be a structural failure trade, which might give us opportunities to take this market to the long side. However, if we get a break of this range-bound price action below the 23.54, could give us a very interesting opportunity to take this market further to the downside. So we're actually going to work on a weekly basis with these highs and lows, because they coincide with the daily structure as well. So we're actually going to leave these levels where they are. So to the upside, we're talking about 25.89, and to the downside, it's 23.54. So those are the levels there. So the dollar has been, the Aussie dollar has been quite strong, as you can see, over the last week. So it did represent a potential opportunity for us. What we did was we got the bounce off this level, and the market isn't really looking back. So it's definitely kind of a momentum trade. Now we are running into this level up here, which is one of the reasons why we decided to just sort of not get involved, although it did give us some of the signals to do so. But it now looks on Friday that we've got a bit of a top being created in this market. So we're just seeing resistance potentially around this level. We've seen it before where the market's failed to close above those levels. So it definitely has the potential to do it again. So we're running into a significant level of resistance in this market. So taking that information, and let's go and have a look at the weekly time frame. So looking very, very bullish to the upside, and then on a monthly, again, you would expect continuation, although the monthly levels here are quite interesting for us. You know, we might get continued, and look at the close as well. So we'd be looking at the close of a bullish candle. So the close would be literally the 80-100 level. We can have a look at the open of that 80-100 level, and we can see that the close is just below the 80-100 level. So actually that 80-100 level is a very important level, just by the open and close of these 3 monthly timeframes. So we're kind of right to be kind of focusing around what's happening at these levels. You get a slightly different image and different picture on the weekly and the daily time frame. So we're just talking about this sort of area up here potentially being a significant level of resistance in this market. So what we'll do is we'll work with the weekly highs and the weekly lows again. So it's the 80.37 level, which we'll have a look at. So we're talking about 80.37 to the upside, and to the downside, we'll work with the weekly lows. So that is 79.06. So 79.06. So we'll put those levels in there, and we will keep a close eye on that market. Okay, moving on to the Euro Yen. You can see for the last 6-7 days, this market has just pretty much moved sideways. So last week's highs and lows can, for all intents and purposes, remain intact. The reason why we like this level to the downside is it's below these highs. We have an ascending kind of line here on a weekly time frame. You can see how price reacts and behaves around this particular ascending line. The same again last week. It actually was precisely last week's low. So so it is a level of importance, and if this market starts to roll further to the downside, then we're looking for a break below the 133.03 level. And again, the level to the upside remains intact as well, 136.60. On a monthly, we're just getting a bit of indecision. It's not clear in terms of what direction this market is going to move in from a monthly time frame. However, there's obviously a little bit more scope to the upside, because we want to take into account what's previously happened. And in terms of a directional bias, we're looking for opportunities to obviously buy this market, to try and take this market, continue to the upside, unless something significant changes. So we're going to leave the levels the way they are. On a daily time frame, it's above the 136.62 and below the 133.03. Okay, so moving on to the euro pound. This is just a particularly kind of choppy market. Probably don't need me to tell you this, but this is what we're getting. So when we get markets like that, they're telling us that they're consolidating. We don't know for how long. There's a couple of levels that might be might give us a little heads up in this market. If we get a break of those sort of inner highs and lows, that's the majority of the price action. If we get a break of those and then we get continuation, but what we're really looking for is a potential break above the 90.30, which has the potential to push this up to the 92.5 level, somewhere in around here, or a break beneath the weekly low of 86.89 to drive prices lower. So we just have to be very, very patient. This is one of these patient trades. We don't know which direction this market is going to move in. There's a lot of traders that trade within inside this range. We're just not really that interested in doing that. Let the market determine what we do next. So just a little bit of patience required in the euro pound. So moving on to the global indices then. So these markets are just, continuing to move away, continue to move higher. Every man and his dog knows that this is an incredibly, a fairly significant bubble with prices continuing to move higher. The reality is, it seems for all intents and purposes that there's plenty scope in this market to continue to push higher. We obviously, no one knows when that is the case, but just be mindful that we are trading, and we're also looking at the global picture as well with these global indices, and there's definitely the potential for that continued upside. However, when this bubble, does begin to, if it does burst, obviously it's going to be very interesting to see what happens, to see how this all unravels. Because as we know, with every single market, especially markets that are going through periods of very, very strong bullish price action, we often see a correction. Now, the question we need to ask ourselves is, are we likely to get a small correction or a large correction with such a buoyant market like this? So for now, it's a bit of a painful market to watch, not just these, but all the other global indices. We're looking for opportunities in other markets outside of these, just because they're just marginally safer. But for now, they just continue to push higher. So from a technical perspective, that's what we're looking for. It'd be nice to get a decent opportunity to take this market long. And as you can see, a lot of the pullbacks are very, very shallow, because all of these levels are actually all-time highs, believe it or not. So, kind of a 2-day pullback or a 1-day pullback, or even, a 2-week, sideways moving price action. These are all-time highs at these levels. Even far back as last week, you're still talking about, buying the breakout and things like that. So what would be nice is if we had this market work within kind of more conventional styles to trading, rather than keep continuing to drive higher. If it just had a natural correction and give traders opportunities to take it higher. So, but that's not happening. So that's the market condition in which we're trading in this market. So okay, so let's go and have a look at this on the weekly time frame. So on a weekly level, we're just going to work like this has been the most incredible start to any year, I think, for quite some time. So it just keeps continuing to squeeze higher. So there's no reason to, in the short term, expect any different outcome next week. So let's work with those highs then. The high is the 28.14. Okay, that's to the upside, and to the downside we have the 27.69. So 27.69 can go in there. Okay. So the US indices are all in the same boat. So we'll just have a look at the weekly time frame, and just for consistency purposes, just work with the high of 26.146. Unbelievable. 26 146. 3 years ago, it was widely expected that these markets would never really see 20,000, or some conditions would need to fall into place for that to happen, and it was an ambitious expectation, but now, as you can see, it's a very, very realized expectation. In fact, we've now sort of pushed 30% above that level. So incredible bit of price action, and looks like it very well may continue. So to the downside, we're going to look at 25,681. So 25,681. So that's the down. That's the weekly level of support in that market. So with the FTSE, we can absolutely work with these levels, and you can see how the market has bounced off that level and has literally bounced off our level to the downside, which is 76.31. So we're going to continue to work with that level. So a break beneath this low would actually give us a very, very interesting opportunity to sell this market if we decide to sell a major global indice. Just at the moment, that doesn't necessarily make an awful lot of sense. We'd much prefer, our directional bias without a doubt is to the upside. So a short-term sell might just give us an opportunity to buy this market at a much lower price. So we're looking at the highs of 77.34 in the FTSE. And the NASDAQ, the trio of US indices. So again, all-time highs on Friday. So I don't know what it will take for these markets to start coming off or to experience a natural correction, but it doesn't seem like it's stopping anytime soon. So that's the daily time frame. So we did break above last week's high, 67.76. So on the weekly time frame, continuing to march higher. So let's have a look at the highs of 68.55. So I'll put these in. So put that level in there, and just to the downs. Oops, excuse me. Sorry, let me just do this again. 68.55. Okay, and the level to the downside is 76.28. So let's work with that level. So 28. So that's the low in the NASDAQ. Okay, so moving on to a couple of commodities then. So we're looking at the gold market now. So we had a break above last week's high, which was the 13.39. But as you can see, there was a little bit of a pullback on that last Monday's candlestick, and a little bit of a pullback. So it's a very, very normal kind of pullback. We are currently trading this market, so we actually have our stop loss built in, and we've mitigated risk on this table. So we're in a little bit of profit on this table on this trade, but we were expecting this price action to break above the 13.44. We do have our take profit up at these highs. So it still has the potential to squeeze higher. It'll be interesting to see the impact of the dollar and what that means for the gold market as well. But we've broken even on this trade already. So let's have a look at that on the weekly time frame. So now this is a weekly level of support and resistance to the downside. So what that means for us practically is if we get a break at a weekly low, then we don't want to be in this trade any longer, which is okay because we've already got our stop loss in. But let's work with let's see if we get some continuation, and this is just a 1 week pullback like we've seen here, or here should I say, where the market is pushed up. We've seen continuation, and for it to come back and fall in line, only for the next week to come for the markets to start squeezing higher again. So maybe that's what might happen here once more. But we'll be looking at those weekly and monthly levels throughout next week. So the high is the 1344. So let's work with that level 1344 to the upside, and to the downside we shall work with the 1324. 1324. So there we go. We've got those levels in there, and what you can see is our entry and our stop loss beneath those levels. So we have booked in a small bit of profit on that trade. Okay, so moving on to crude oil. We've got a strong bias to the upside in this market we've had for a little while now. And we have seen the pullback that we were looking for, as you can see. But it was more of a pullback that kind of bounced off this horizontal level. Now, it would have been nicer for us for the market to come back to this level of support in here, the 62.20, before taking that market longer. But it seems like this ascending line has been the reasonable level of support in this market. So let's have a look at it on the weekly. So what we can do is we'll just change the high ever so slightly. So 64.87, 64.87 to the upside, and to the downside I'm going to take note of this low, which is the 62.82. So 62. So just to be clear, we are looking for opportunities to buy it. We just got to be very patient and literally wait for those opportunities to arrive. On a monthly time frame, you can just see we've had 5 months now of just bullish price action, which is why very important to recognize we've had a close above the 62. What's this high? The 62.56 level. So $62.50 level. We've had a clearly defined break above that. So again, you can see the potential to the upside. Who knows whether they get back to these previous highs or not? But we're looking for opportunities to buy it, and this could be a potentially very, very interesting trade in 2018. So we're going to monitor it very carefully and just wait for those opportunities to arrive, and to not necessarily rush into them in any way, shape, or form. Okay, so the last market now is the 10-year note. So obviously it's quite a straightforward trade idea. We're looking for opportunities to sell it. We've seen these levels of support in here be very important over a good few years, and actually there's another level in here which goes back 2 or 3 years ago now. So our trade idea was quite simple, was to look to buy a confirmed break to sell the break of that level to the downside, just in case this level provided a little bit of resistance. That was very possible. So we wanted this market to clearly break that level of resistance. Now I'm going to show you exactly what that is when we just flick over to the weekly time frame. So you can see these levels in here. You can see that level of support, and our entry price to the downside is just beneath these levels. So we've now had a confirmed break of that, and there's nothing but air underneath us. So we might be looking for, down to the 118 level. And we've discussed many times in our live trading as well, the kind of fundamentals behind this trade. So very simple, very straightforward idea. Again, it could represent a fantastic opportunity for us in 2018. So again, we're going to be monitoring those very closely. So in terms of the levels, we're just going to work with new levels. Oops, sorry, let me take a note of the low. So the low of this market is 122.09. So we'll put that level in here, 122.09, and to the upside, it's quite a long way away, but 123.14. A lot can happen in the meantime in this market. 123.14. So those are the weekly highs and lows with regards to the 10-year note. So that was more of a sort of a fairly brief 35 minute review of the markets there. A number of them are not too far off last week's highs and lows, so it does enable us to get through them fairly quickly. And I hope you see the potential for a couple of interesting trades now over the next few weeks. The dollar obviously being one of them, even though there is a lot going on. There is a lot to contend with. But I suppose that therein lies the beauty or the potential for us as technical traders, where we can try to match up a lot of the fundamentals and try to get that on side. However, we can still trade these markets technically. We can get in and out of them. We can protect our capital. We can look to let our winners run, and we can look to, cut those losers short as quickly as possible. So all of those things are always still possible, irrespective of the fundamental undercurrent, and it's just up to us to interpret that information and hopefully, make the right decisions. So that's the nature of obviously trading any market. Okay, so that just about covers it for this evening, guys. If you would like to follow us, you're very welcome to do so on Facebook, Twitter, and LinkedIn. The details are there up on screen. And now is a good opportunity for any questions. If you do have any questions, feel free to post it into your chat box now. Or if you prefer to email us, which I know some of you do, you're very welcome to do so. Do so at support@TheLiveTradeRoom.com, and we will endeavor to get back to you as soon as we possibly can on it. So I'm quite happy to just give a few minutes and see if any questions come in. So yeah, absolutely fine, guys. If you need to shoot off, that's great. Thank you very much for joining us. Hopefully we'll see you in the live trade room during the week. And don't forget, the live trade room is where we apply, a lot of these levels of support and resistance, and we blend it into our decision making when we trade these markets. So hopefully we'll see you during the week. Rob, you're just alluding to the euro bond. Could I have a look at it? So yes, we certainly can. In fact, it's in a very similar situation to our 10-year note. So, we've actually broken beneath these levels now. So let's see, do we get continuation, or do we just get this market just hesitating around these levels? We don't know, but we're certainly in it to find out. And it's the same principle effectively with regarding the Eurobond. You can see the potential air to the downside, and in actual fact, you can see the same levels of support and resistance. And some of you were saying, yes, is there an opportunity to buy this market? Technically, there may be the case, but in terms of a directional bias, we're looking for opportunities to sell it, which is why we have our sell order sitting in this market just beneath this level, which means if we're looking to sell this market, we're looking to take this market lower if we get a break of this area in here. So yeah, good shout. I'll just zoom in a little bit so you can see the levels of support, the levels that really support price, which is around this area. Now, we'd much prefer a trade like a double bottom, which is what we're seeing. If there is some of you that would like to buy this trade, it may exist above these highs, above the 160 kind of 90 area, so in and around here. So we will look at it during the week. So perhaps no urgency in which to be looking to buy this trade. Without a shadow of a doubt, Rob, our interest is to the downside, and that's really what we think is actually really quite important for all traders, is to have a directional bias, to know what you're looking to do at the market, and not necessarily look to buy and sell every trade that pops up. Even though there's a strong argument in this case, which I fully understand, the reasons why a few of you have mentioned the opportunity to buy it. However, just above these highs would constitute an interesting potential to take this market to the upside. But for many other reasons outside of perhaps the price action of this market, we are looking for opportunities to sell it. My pleasure, Zinli. Thanks very much for joining us. No problem at all. So on that note, guys, it doesn't look like there's any other questions or even markets for me to look at. So I'm quite happy to pack up a little bit earlier this evening, which is not a bad thing. So on that note, guys, I will wrap it up. Thanks for joining us. This webinar is being recorded and it will be placed in your members login area normally within the next hour or so. So on that note, I'd like to thank you all for joining us. So from everyone here at the Live Trade Room, thanks very much. Enjoy the rest of your weekend, whatever's left of it, and we look forward to seeing you next time. Bye for now.